Hello traders, welcome to another daily analysis. Today it's November 28th, but right now it's already 29th. We are just 7 minutes prior to the London session opened. First of all, apologize for my delay as usual. Monday, if there's no big impact, or if I take a look at the market and nothing has happened, sometimes I tend to update it quite slowly. Right now, just to get you a heads up that today I don't have any daily trade available. Right now, pretty much I'm only doing the session trade because of the big news coming up on Wednesday. So that really gave me stay out of the daily trade, as I don't want to get into this kind of big risk event. And of course, I'm talking about the OPEC meeting, which is coming up very soon on Wednesday, and that's really going to affect a lot of financial market in terms of the, first of all, of course, the oil market is going to affect directly with the Canadian dollar, but that's also going to affect a lot of other commodity price, and also it's going to affect the US dollar as the oil is denominated in US. And let's just take a look at my analysis. So basically, there was no tier 1 data over the weekend, and also no tier 1 data on Monday today. So it's very usual Monday, very slow. The ECB Draghi came out, speaks today, and right now it just looks like they are really leaning toward the stimulus. That means that they might continue the bond buying program, they might extend it, but they will decide that next week. But basically, that's what the market anticipates right now. But in terms of euro, you have to be careful for shorting it, actually, because right now it's month end, and every month end you have inflow into the euro dollar. It's a lot of investment bank or banks in general trying to balance their sheet, especially the European banks. So every month end they will actually buying a euro. So it's just a regular schedule events. Every month end they were going to be inflow into the euro dollar. It means that a lot of banks are going to buy euro dollar. That's of course going to support the euro dollar. So although long-term perspective, it looks like they are going to continue the bond buying program, they are going to continue stimulus, which means they are going to continue weaken their currency. But because of the timing, so right now it's kind of neutral for euro dollar for this week. It's negative, it's bearish fundamentally, but also depend on what happens next week. And also we have a month-end buying to support euro dollar. And OPEC meeting coming up Wednesday. Right now the oil market is really volatile. You have up and down, really depend on different rumors, different members speaks from the OPEC meeting. So right now I'm pretty much stay out of the Canadian dollar at all, because I don't see the clear direction. Of course you can, if you have certain technical tools that you want to write on the momentum, and definitely feel free to do so. I don't have that kind of tool, technically speaking, so I just try to stay out if I don't know, if I cannot see clearly about the fundamental or the sentimental direction. I'm pretty much stay out, because otherwise I have to monitor it. That means I have to turn on the news and Twitter in order to trade the Canadian dollar or the WTI futures, and I don't want to do that. I don't want to glue myself in front of the screen. So that's why I tend to stay out if I have this kind of volatile events which I don't see the direction clearly. So it's really 50-50 whether they're going to meet an agreement on Wednesday or not. But in terms of the long-term perspective, I'm still very bearish. And the reason is because I can mention this OPEC oil curve is really artificial, done by members. And it's just really against the fundamental view of the economy, because you cannot really artificially control the supply and demand for too long. You can definitely do it temporarily, but eventually the market will always correct itself. That's the first thing. Second thing is that we're not talking about a country's policy or rate decision, which you only need to control the US dollar if you are Federal Reserve. Now you're talking about a commodity that is universal. So what happened is that even though the OPEC members trying to curb the output, you still have a lot of other oil producers that are simply going to take this advantage to keep producing more. Even at the end of the day, people are only looking out for their own best interest. So even if the OPEC member curb the oil market, you have Russia, you have Canada, you have US, all these countries are going to continue pump up the oil, and eventually that's going to correct the market. Not to mention that the member itself within the OPEC have already have so many different opinions, and then Iran, Iraq, they don't want to curb their oil output. So it's so easy for any member to decide, I don't want to follow through, I want to make more money. So it's just really, in fundamental point of view, I just don't think it's going to work for a long run. But of course, right now the sentiment is really going to be volatile if they decide to curb that. Of course, going to be a lot of positive sentiment for the oil market. But I'm saying for the long run, I'm still quite bearish. And because of that, for the long run, I'm still quite bearish toward the Canadian dollar. Because if the oil market is not picking up, then what's really left for Canada is their own economy, which is not looking too good for now. And they might really keep doing the easing, whether they're going to lower the interest rate or they're going to bond buying, things like that. But of course, follow through, we'll have to see what kind of decision they're trying to make. And the meeting is coming up very soon, again this month. Next month. I don't know when it's coming up. I have to get a calendar later on. But just to let you know, that's pretty much what happened to the Canadian dollar. Now, equity market today was all red. Again, we are actually pulled back from the risk-on sentiment last week. We pulled back from the financial market, equity market, also pulled back for the US dollar. And it's very natural, as I mentioned, that currency trading is never a straight line. Trading is never a straight line for any instrument you buy in. So of course, it's very natural for US dollar to pull back. But fundamentally, it's still a very strong currency. I really have no doubt to keep buying it and continue to be strong all the way till 2017. The only thing is that you don't want to go against your Canadian dollar at this moment, just because you don't know what kind of decision OPEC is going to come up. Also, I don't want to go against euro dollar, British pound at this moment. Same thing, because I don't know what kind of momentum we have toward the euro dollar. British pound is actually neutral right now. Now, British pound, very interesting is that everything that Donald Trump gets elected right now, it's really actually very well supported. And the reason is because investors are still start to feel that maybe it was oversold. Now, we don't know whether it's oversold or not. It's really depending on what happened to the negotiation between Britain and Euro. But as for now, investors kind of feel that they are being too panicked back then. And that's why right now, British pound is actually very well supported compared to other currency, compared to Euro, compared to Japanese yen and Swiss franc. And that's why it's kind of neutral, but fundamentally it is still bearish, and that bearish is largely because of the uncertainty. Nobody knows how the negotiation is going to pan out, and nobody likes uncertainty, especially for investors. So British pound is really neutral. I don't really want to get into myself personally, just because I don't see a clear direction. It's fundamentally neutral, sentimentally. British pound basically right now, I'm just doing it as a risk event trade, going into a short-term trading or session trading. Now, the only weak currencies right now is really Japanese yen and Swiss franc and euro dollar. But because euro dollar, as I mentioned, the month-end buying, it's actually going to support it. So really, pretty much for this week, the weakest currency is going to be Japanese yen and Swiss franc. And these two countries are very happy to see their currency being weak. Both are in a very similar economic situation. Both are largely rely on the export. So they're actually very happy that their currency is weakened. And they're actually all ready to stimulate the currency, to stimulate the economy any moment, and to devalue their currency even further. So that's why right now, you are going to see these two currencies still being the weakest currency. And that's pretty much it. I'm going to go over the chart, but if you're looking at the futures market, COT based, it's really still, Australian dollar is still being largely supported. Pound, we still have a lot of short seller position, same as Canadian dollars, and the largest one is actually Euro dollar, as mentioned. People are actually getting into it ahead of the bond buying decision, so just to see what's going to happen. Another thing to mention about Euro is that the Italian referendum is also coming up very soon, and that's going to cause again another volatility for the Euro dollar. Of course, you can go either way depending on the outcome. Over the weekend, another event to support Euro dollar is actually the France right presidential primary. The candidate, I forgot his name, anyway, one of the candidates won, and that's actually a positive sentiment for France, which is positive sentiment for Euro. So that's another event to support the Euro. Japanese yen is actually positive position into it. The Swiss franc is negative. So it's just, I look at, I don't trade with it, but I just tend to look at it just to see how are people place their futures contract position and give me a sort of more long-term perspective. This thing only come out once per week, right? So it's just really a sort of thing to give me a guideline. But as for now, fundamentally, US dollar is still a good buy. Australian dollar and New Zealand dollar are actually the strongest currency for now, and the reason is because they are really not in a headline for anything. They don't have any referendum. They are not in any rate meeting, bond buying program. They pretty much stay out, right? They again geographically, geopolitically, they are really way out of the turmoil with any other pairs and any other currencies. They are really on their own, but because of the commodity price has picked up very well, we are still in the worst months for the commodity price. But again, it's largely due to the futures speculators. Right now, they picked up very well, so it's still a very good currencies to buy, and very good economics for these two countries basically. And the only thing you need to watch out is again it's China. As long as China continue to grow, the Australian dollar and New Zealand dollar will continue to be supported. And time to time, they do have the risk events that's going to change the direction shortly, such as the GDP price, such as their employment data, GDP data, things like that. But as for now, they are actually very strong currency. So right now, the strongest currency for me is really US dollar, Australian dollar, and New Zealand dollar. And the weakest currency is Japanese yen and Swiss franc. Euro dollar is neutral for now because we have mixed events. British pound is neutral for me, and Canadian dollar is neutral for me. I try to stay out at this moment. Now I'm saying that just because I do daily trade. I also do a session trade, which is I trade into a London session. I also trade into a risk events. So just to give you a heads up, that's what I'm looking at right now. Let's take a look at the risk events just to see if we have anything coming up today and this week. So Tuesday today, you have the preliminary GDP. Now this is important actually for US dollar. Of course, right now it's again we all looking at continuation growing for the US dollar. Again, I'm only going to trade if you have a surprise, and I'm only going to trade into a positive surprise. Just to add on more probability for your trade. So we are expecting 3%, and the last time is 2.9%. So let me give you maximum number. Now that's a number you're gonna look out for. If you have something that's more than that, then that will be a very good momentum for you to buy US dollar. Now, which currency you're going to buy against? Of course, you can buy against Japanese yen, Swiss franc, and you can also buy against Euro dollar if we have a positive deviation. So we are looking at 3% as our preliminary GDP. Okay, 830. Yeah, 3%. So if anything above 3.3, so if anything above 3.3%, that will be a very good buy for you. So 3.3% is what you're looking at. 3.3. The next one is consumer confidence. This is not a tradable event actually, so I'm going to ignore it. But of course, you can still take a look at it. I'm just not going to trade it. And then you have the FOMC member speaks. In the afternoon, of course, you have RBNC financial report, but I don't trade. I don't trade after London session, so it's just, but of course, for the daily trade, it is just watch out. You have actually a few events coming out from New Zealand dollar, building approval for Australian dollar, and Wednesday you have bank stress test. These are or not that big events. The biggest events, of course, is the OPEC meeting for Wednesday. Another speaks from Draghi, and you have the non-farm payroll change from 8:15. Of course, 8:30 you have GDP. Now it's really for Canadian dollar. It's really depending on what happened to OPEC meeting and what happened to the GDP price. But most likely, OPEC meeting will really play a big role for the Wednesday. Crude oil inventory and OPEC meeting coming out at the same day, so it's really depend on the result of OPEC meeting. If you have a positive result and you have a positive inventory a drawdown, then it's going to be very positive for the oil market. Vice versa, if you have a negative outcome, a negative build up, it's going to be negative for oil market. And of course, at the Asian session, you have Australian private capital expenditure, also the Chinese data, which are going to relate to Australian dollar and New Zealand dollar. Thursday, only thing manufacturer PMI, again, not that important. The only PMI you want to look at for British pound is the service PMI, as the service industry is the biggest GDP component for British pound. Unemployment claim, this is the usual one every week. Manufacturing PMI, again, not really tradable unless we have a surprise. And then, of course, Friday, you have the non-farm payroll. So this is really a good event to trade on this Friday. Again, the tricky part is you want to look at the three events and you want them to be all in sync. That means, first thing first, if you want to trade events, you want all three to be either negative or positive. Now, as for now, I'm only looking to trade into a positive data. So I want all three to be positive. That's the first criteria. Second criteria is that you want one of them, preferably the non-farm employment change, to be positive deviation. So you want this to be a positive surprise. I'm going to give you a number on Thursday, just because I'm just closer to the events. Let me give you a number, but basically just give you a heads up. This is a very good event to trade on Friday, but only if you have these few criteria. The Canadian dollar employment data is also a good event to trade, but most likely it will depend on what happened to the OPEC. Again, if it's a negative outcome, you're looking to sell Canadian dollar. If it's a positive outcome, you're looking to buy into Canadian dollar, providing if the data is in line with whatever you want to go, whatever direction you want to go. Okay, so we'll talk about that on Thursday. But as for now, today, Tuesday, really only thing to trade is a preliminary GDP, and only if we have a positive surprise, which is 3.3%. Again, 3.3% is the number you're looking at. Okay, so let's take a look at our daily trade today. Right, just give me 1 second. All right, so first, Euro Pound. Euro Pound, again, look at a very small movement, really nothing in particular. This is the candle we're looking at right now. It's really, quite supported toward British pound. Again, month end flow, things like that. Euro Swiss, don't see anything. Some people might argue, say this is like a kangaroo tail. Well, it could be, but as I mentioned, sentimentally, I don't want to sell against. I don't want to sell euro dollar for this week just because I have two events to support it, and also I tend to not buy into a Swiss franc just because I know the SMB sometimes do a lot of intervention, unexpected intervention. So I tend to not to like to short Swiss franc for daily trade. Let's keep going. Euro dollar. It's very interesting. You have large surging up and then large going up. It's, for me, it's really indecisive candle, right? As for now, so really nothing really at my plate at this moment. Really don't know where it's gonna go. So just stay out for euro dollar. Euro Aussie is continue to go down. This is actually 1, 2, 3, 4, 5, 6 days, 6 days of downside, and we are actually near support right now. So don't have any signal, but in long-term perspective, of course, it's a currency to short. EuroCAD, again, I'm staying out of any Canadian pair. Huge bearish candlesticks, and but for me, again, it's really pretty much today's we're probably going to have an inside candle, and really indecisive because of the Canadian dollar. Euro and USD, a small movement, still going to the edging to the downside. Euro yen, for me, this is not really a bearish. It is a bearish candle, but it's not really a bearish signal. It just gets if you trade a daily trade, it's really important to look at the candlestick's position more than the candlestick's shape. So for me, it's more important to look at the big picture rather than look at individual candlesticks. Because if you look at big picture, it is still a very strong uptrend. You're very well supported. You have this 200-day EMA, you have this great trend line here. So it's very, very supported. And when I look at this picture, then really depend on, do I have any space to trade? Now, for me, it's just consolidation. It's really in the ranging area. It's not really my favorite candle to trade. It is in the upside. And the only thing good is that if you short it, you have a lot of room to go. But fundamentally, I'm not going to short Euro versus Yen because they both are very bearish for me and really nothing for me to short into this currency. Pound Swiss, same thing for me. It's a ranging market. Cable, it's a ranging market. You know, I'm not. Some people might say this is a bearish engulfing, and for me, really not really. I mean, it is a bearish candlestick. It does engulf 1, 2 candles, 2 candles. But for me, it's just this whole thing is really a consolidation zone. You know, I'm not really looking to do anything. I mean, you might draw and say, you know, you're still in this small triangle, which you are. So it might break out, but the thing is, it might break out any side. Of course, looking more into the downside, but fundamentally and sentimentally, British pound is actually quite supported for now. So that's why I do want to short it, but it's just we need a momentum to push it down, right? But for me, it's really more like a ranging area. Pound Aussie is still aging lower, but nothing really too significant. Pound CAD has a down day, again, Canadian dollar. Pound New Zealand, same picture as Pound Aussie, and Pound Yen, it's again, same picture as all the young pair, Japanese yen pair. Swiss franc and Japanese yen, you know, 2 safe haven currencies. It's still, you know, look at it, you can just tell the Japanese yen is really the weakest currency for now. But you know, don't be surprised that any risk events can completely change the Japanese yen's position, and that's just how powerful Japanese yen is. You have to always keep that in mind, that Japanese yen is always the #1 favorable currency to buy whenever there is a catastrophic event happen in the financial market or in the world in general. Dollar Swiss, sort of indecisive movement actually. Again, dollar is very strong for me. Dollar yen, all this just for me, all this is just a pullback position to continue to go higher. Aussie Swiss, again, Australian dollar is actually quite well supported, right? You Aussie CAD, Aussie, New Z. And look at that. This is we were in this trade almost 2 weeks ago. We were here, we got in, stop, and we got out. You know, it goes up, it goes down. So it's really you're stuck in this zone, just right below the 200 EMA. I don't have anything right now, but just to let you know, it's really, for me, looking at the big picture, it's really a range bound. It's not really nothing for me to see. Aussie yen, again, we just keep going higher. And CAD Swiss, it's a very strong bullish day, but again, I'm staying out of the Canadian dollar pair. CAD yen, New Zealand Swiss, keep aging higher. New Zealand dollar, same thing here. And New Zealand CAD, I'm staying out, and New Zealand yen. So as I mentioned, I don't really have anything on my plate. This is not a kangaroo tail because the body is too large compared to, well, actually, let me this is not a buy signal basically for me, but let me just double confirm. 17.33. Yeah, this is not the body for me. The body is too big to signal anything. But of course, you know, fundamentally, New Zealand, it's a good pair to long. The only thing I don't like to buy at a breakout. And for me, this is a breakout, right? Because for me, this thing to go up, it has to break out the top of this candle, which is 79.77. I don't like to buy at a breakout. I often really just like to buy at the pullback. I like to buy at this. I like to sell at this kind of high, buy at this kind of low. So I don't like to buy at the breakout. It's just me. For me, daily trade, I tend to risk more. So I really want to. I'm very patient in terms of daily trade. Averagely, I only have 1 or 2 trades per month, and for me, that's really good enough, right? Because my winning rate is high, but it is high because I only take a very selective trade. If it's not good enough, I don't trade it. So I tend to, you know, trade into a session trade and then or risk event trade. But for daily trade, I really don't like to buy at the high or sell at the low. So guys, that's pretty much it. You know, I don't have anything daily for now, but if you want to do sort of like a sentiment trade, session trade, I am looking to buy again Australian dollar, New Zealand dollar, and US dollar versus Japanese yen, Swiss franc. So, and depending on how you want to trade it, it's really depending on your own technical strategy. But for me, it really doesn't matter that much. As long as you ride on into the right direction, then you can use any technical strategy that you like. I actually just use, you know, daily pivot. So for me, I don't have any spatial technical strategy in terms of trading daily. You know, for me, I got in Euro. I have one position right now, short Euro Aussie. I got in at here. So that's it. You know, I don't have anything spatial. I got in at here. PV point for me, I put a pending order here. I have a large stop loss, and I just let it ride the sentiment. I don't even take a look at it, right? I enter my position with pending order, and I just go ahead and do my stuff. And every couple hours, I take a look at it. So it's very passive way of trading. Again, it's just my style. It's not really necessarily fitting your personality. But for me, I tend to find out it works very well for me when I'm not in front of the screen. Because if I'm in front of the screen, and I tend to get quite nervous, and I tend to like to, you know, play around with the trade. Basically, I tend to do a lot of unnecessary things, just to really sabotage my own trading. That's why nowadays I find out it works very well for me. It's just to write the sentiment, write the trade, put down 1 order, 2 orders, and just leave. But if you want to do that, that's definitely fine. If you want to monitor your trade, that's fine too. It's really depending on your personality. But in terms of the fundamental and sentimental pictures, I'm looking very bullish into the Australian dollar, New Zealand dollar, and US dollar. And you can sell Japanese yen and Swiss franc. Those are the more certain currencies on my plate. The rest are very neutral to uncertain, especially Canadian dollar, British pound, and Euro dollar for this week, for now. Okay, so guys, that's it. And please let me know if you have any question. Again, I apologize for this late update. I'll try to be on time tomorrow at around 5 p.m., 6 p.m. Eastern Standard Time. But otherwise, let me know if you have any questions, and I'll be very happy to answer that. Okay, thank you very much, guys. Have a good week of trading. Thank you. Bye-bye.